But just because you invest in something, you're not owed a return. You're not guaranteed to skyrocket your. Welcome back, YouTube. In today's video, we're going to talk about the lawsuit with Elon Musk totaling up to $258 billion. We're going to go over price action for Dogecoin, Bitcoin, and we're also going to talk about the fact that Dogecoin shorts have now reached an all-time high since November of last year, but certainly year to date. I'm going to read a little bit from the article here on Forbes, but pretty much someone is saying that Doge is a pyramid scheme and that Elon pretty much exploited it for his own gain, and he wants Elon to stop mentioning Dogecoin. Elon, Tesla, SpaceX, he doesn't want any mention of Dogecoin, and I believe he wants the SEC or some entity to list Dogecoin as a gamble, but we're going to take a look at it here before we get into the technicals. It says plaintiff Keith Johnson, who purchased Dogecoin in 2021, is seeking a class action lawsuit in the Southern District of New York against Musk and companies SpaceX and Tesla for at least $86 billion in damage. Johnson argues Musk drove up the price of Dogecoin with his tweets about it, but the currency lacks underlying value, and the Musk promoted it for his own profit, exposure, and amusement. Johnson is also seeking court orders to prohibit Musk from promoting Dogecoin and to declare Dogecoin trading a form of gambling under federal and New York law. The reason I titled this video is "You're Not Owed Anything" is because I've seen this a few weeks ago, actually about a month ago. Elon replied to one of my tweets on his page, and the amount of replies that I got, some were positive, but a lot of them were just really upset people who had nothing to do with the actual, who were speaking of nothing to do with the actual tweet, but they were saying that Elon cost them money, or asking me why am I Republican, just stuff that had nothing to do with the actual tweet. But people were very, very upset, and this is one of the reasons I made the video when I said that people are, because of Elon Musk's ties to Dogecoin, whatever happens to him, people are going to try and tie all of his investments or things that they believe he cares about, whatever's going on with him politically or in his personal life. So this is going to be SpaceX, Tesla, Dogecoin, which is pretty much what I said in the tweet. I said that they want SpaceX, Tesla, Dogecoin. They want these things to fail, and that's literally what I said in the tweet. And I felt like as the economy breaks down, we're going to see more of this type of more of these types of plays take effect. Initially, I thought this was going to happen more so with like YouTubers and like hype boys saying this is going to go to like the heavens, and just literally just leading off of like hype and momentum and stuff like that. I thought we were going to see these types of things, but of course you go after the people with the most money, at least initially. So this is one of the reasons that this doesn't surprise me at all. But when it comes down to making your investments, one of the reasons I say that, this is not financial advice, do your own research, stuff like that, is because there have to be some form of accountability on your end, but also you can't go on Twitter. And I know that this has become really popular, whether that's with influencers or just groups and stuff like on Reddit, whatever's trending at the time. There's a lot of people that go all in. I've seen people take out, equity out of their home or sell their extra cars and stuff like that to go into these positions. And then you don't know anything about investment or investing at all. So you're literally just going off of Twitter or whatever you're seeing to propel something that kind of goes to like the moon, or that said that's going to go to the moon. That's not how this works. This is another one of the reasons why I make videos going over like cycles and DCA. And I started this stuff last year, even before Dogecoin corrected, because it's important to have this kind of information out there. Because the Dogecoin community it's strong and it's large, but it's also very unique. It's one of the reasons why I don't put out as many videos as I can, because I try to put a lot of research into like my videos. And I made all those videos, especially when I first started, about cycles and corrections and warning even about the SNL skit. Because even though the Dogecoin community is large and unique, we have to be honest with ourselves and come to the conclusion that the Dogecoin community overall, as far as for investing experience, is a lot less than people who typically invest in like Bitcoin or the Bitcoin maxis or the Ethereum maxis. The net worth of the people or the community overall that typically invest in Dogecoin is a lot less than the people who are going after coins like Bitcoin and Ethereum. We can look at the average wallet amount, the average amount of Dogecoin that's held in per wallet, and come to that conclusion. So you have to, there has to be a form of accountability here where you're saying that, okay, well, I'm new to investing. Let me take some time here to kind of learn what's going on, or even diversify what I'm investing in, whatever approach that you want to take. But understand that when you're making those decisions, those are your decisions. Calling Dogecoin a pyramid scheme doesn't make any sense. That's typically how the market overall works. And I've been saying this for a while. When you make money in the stock market or in crypto, typically speaking, someone lost money. That money comes from somewhere. It just doesn't magically appear. If you're on the losing side of a bet, someone's on the winning side. If you're on the winning side, then someone's on the losing side. That's typically how it works, even if you break down options for what they really are. But just because you invest in something, you're not owed a return. You're not guaranteed to skyrocket your money to the moon, or guaranteed to make anything back. And this is really just one of the issues here that we're going to see, that we have, because we have so many new investors into the market, which I do believe is one of the things that kind of like the government wants, because they want to heavily regulate cryptocurrency anyway. And so this is kind of one of the things that they're going to kind of push the narrative on and perpetuate, because they want to kind of overly bear down on the crypto market. I agree that we do need some form of regulations, but not to the point where it's a little stock market junior here, where the regulation, there's so much regulation that it's practically rigged for the big wigs, or the people who already have a lot of money in the institutions in the market. The 258 billion, I think that's absolutely crazy. I don't know. I doubt it will get very far, but we'll see. It'll be certainly very interesting to kind of follow this lawsuit and see how it plays out. So enough of that. Let's get into the technicals here. So what we're looking at here, we're looking at the heat map on Bookmap. And pretty much this is going to give us the ability to see the pools of liquidity, buy orders, sell orders, and pretty much explain what's going on in between the candlesticks here, so that we can get bounces, so that we can kind of determine where bounces are coming from and determine the price action and where the coins are looking to consolidate or where they're looking to rise to. So as you can see here, there is a strong sentiment to push Bitcoin lower here, as Bitcoin is battling at the low 20,000 range. You'll see that these strong lines, these red bars up here, are pretty much the effort here to these sell orders. Really, when Bitcoin hits these numbers here, these orders are going to sell to push the coin lower. And you see here, we may get a breakdown here in the next few moments if some buy orders don't come in, because these buy orders are going to, when these green balls, you'll see that when it gets sell order pushes it down and it hits these pools of liquidity, these orders execute. And that's typically how you can have that sideways movement or those bounces where if you look at a candle chart, it'll just say, oh my God, it looks stagnant. What's going on? This is what's going on in between. But you see now where Bitcoin is actually falling down, you'll see that this is light blue and there's no yellow or red areas here. That means that there aren't a lot of buy orders. You may see some starting to come in here, but as of right now, there aren't a lot of buy orders. So this means that the pressure from up here, which there are some building, it means that Bitcoin has the potential here to fall a little lower here, possibly down to like the 20,150 range, until some buy orders come in to kind of put pressure against those sell orders. That's why you see a lot of those red bubbles forming there. And you see the yellow building up here, so that's where you're starting to get some of the green orders here. And you see Bitcoin starting to trend sideways here at like the 2230 range. So let's take a look here at Doge. And you'll see that Doge is literally trading in the pool of liquidity and it's running a tight line here. This has been the case with Dogecoin, these price ranges. And this is one of the reasons that we're going to take a look at the short term in a moment. But you'll see Dogecoin is running an extremely tight line here. It's literally bouncing in the pools of liquidity, but they are aggressively trying to get Dogecoin lower. You can see this, you see the evidence here with these red balls and the size of them. Those are sell orders to push the coin lower. But again, the sell orders are right on top of the equilibrium, and the buy orders are right beneath it. So this is why you have that tug of war with Dogecoin to pretty much trend it. It looks like it's just stagnant or just trending sideways. This is what's going on. Buy orders is literally dark red. There's some fluctuation here in the sell orders, but the buy order at, what is this, like 5.4, it's pretty much solid red all the way across. So they're going to need some additional shorts or something negative here to try and push this coin lower. And I do believe the people that hate Dogecoin or hate Elon and stuff like that, they certainly may take advantage of this to try and get the coin lower. But as of right now, Dogecoin is doing tremendously well in the pools of liquidity. So let's take a look here at the short chart. All right, so what you're looking at here, I'm going to show you the year to date, and then we're going to zoom in here. But what you're seeing here is the current short position here of Dogecoin. As you can see, we are setting that higher trend. or that higher high on the next cycle from Dogecoin shorts, pretty much trending at the 200-day moving average. And now we have the 21-day and the 72-day now peaking above the 200-day moving average. Again, very aggressive for Dogecoin shorts and very bullish here in the short term that these are going to actually increase. But if we take a look here where the actual candle is, not the wick, but the candle, you'll see that this is actually the highest or the greatest amount of Dogecoin shorts we've had this entire year. We haven't had this many shorts since around December 14th. So actually since before Christmas, the shorts have not been this aggressive here in Dogecoin. So this is an indicator this is an indicator stating that they are trying to take advantage of what's going on in the economy. And typically this is normal behavior for people who are short on certain assets. And we could have certainly seen a spike today. We're going to zoom in here based off of the news with Elon, because I do believe they don't care how they get it down, just as long as they do. So we're going to zoom in here today, and boom. Okay, so yeah, so we see that, yeah, as far as for shorts, it's literally just blasting off literally like to the moon. The shorts here are spiking very, very aggressively, and we're literally setting that all-time, that higher high, and we haven't really peaked yet or even started any sideways movement. So it's hard to say whether or not this is going to start trending sideways right now, or if they're going to be more aggressive when we get another big green candle upward. But as of right now, I know that they're not going to, because of the amount of buying pressure that we saw even in Bookmap, those buy orders, the pools of liquidity directly below the price, I know they're not going to aggressively come out of this position. If they do, you may see a slight red candle down, but typically that just means that they're going to swap like they did a few weeks ago, and then they'll re-enter the position relatively quickly. So as of right now, the battleground for Dogecoin is going to be around 5 cents. And of course, the battleground for Bitcoin is going to be that 20,000 mark, which is very, very important for the next cycle of crypto overall. That's going to be a really big indicator as far as for how deep or how long this is going to be, because this can actually kind of trickle over into like an actual crypto winter if we get that breakdown below that and Bitcoin breaks its infamous 4-year pattern. That's certainly something that we're going to have to keep an eye on going into the weekend and going into next week, as we see the 0.75 basis point rate hike affects the overall economy. I hope you found value in this video. If you did, like the video, subscribe to the channel. It's absolutely free. That's one way you can support the channel, and it costs you absolutely nothing. I appreciate all of you. Thank you. And until next time.